Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So yesterday, DXY dollar index made a high of 104, almost 104, and after that, we saw sharp price rejection, and ultimately, we got to see huge correction on the chart of DXY. And right now, DXY is trading at 103.36. You can see here dollar retreats as data shows US economy near stalling point. US dollar is against a basket of currencies on Wednesday after data showed US business activity approached the stagnation point, which is very important, in August, with growth at its weakest since February as demand for new business in the vast service sector contracted. So this was a big news, as a result of which we got to see a big correction on DXY. And my dear friends, today we have BRICS Summit. So it also may have a huge impact on the chart of DXY that we'll come to know after the summit is over. But if you look at the normal economy calendar here, you can see here, again, the market will be volatile today during the US session because of news coming up. So again, you need to be extra careful. Try to close down all your US dollar positions before the news because your stop losses may not work because of high volatility and slippage. And as I always say, my dear friends, it is very important for traders to know when to go with the fundamentals and when to go with the technicals. As I have told you dozen times, plenty of times, that when the news comes out, when fundamentals dominate the market, the technicals do not work much. And yesterday also we got to see the same stuff. Market is going high. Our resistance was around 1909, 1910 level, and we almost got to see a good price rejection also. But immediately news came up and we got this huge candle. So again, today you may see extra crazy volatility, so please be careful. Try to follow the trend of the market after the news instead of looking for technicals, okay, because fundamentals will dominate the market. And if you look at the chart of DXY dollar index, then you can see though dollar index made a high of 104 here, but the market is still not very nice. Okay, the market is choppy, the market is sideways, and you cannot consider this as a beautiful chart. So 103.60 may not be the next resistance because yesterday market broke it, but the support levels are still the same. Before news, we have support around 103 and 102.80, and I don't think so market has the potential strength right now to break these two levels. In case DXY drops also before the news, we can expect the market to take support around these areas. And after news, obviously we have 102.50 as the biggest support on the chart of dollar index. If you're wondering about resistance, then you can see that I have drawn a trend line. Okay, we can see the trend line is acting as dynamic resistance, but I don't think so in this situation market has the strength to cross 104. So 104, 104.10 is the next resistance on the chart of DXY if dollar index shows upside before the news. After news, I cannot predict. So this is the 1 hour chart of gold, my dear friends. The most important thing on the 1 hour chart of gold is that, okay, a couple of days ago we discussed about the possible trend reversal here. Remember, I told you guys that market is no longer forming lower lows, and there's a high chance that we may have a trend reversal. And yes, we can see the trend reversal is here. We can see the gold is standing at 1920 right now. So the market sentiment is changing, and as a result we also need to change our trading style according to the market situation because flexibility is very important. But two important resistance level on the chart of gold are still the same here. First of all, we have a very strong resistance around 1935, 1936. This resistance of 1935-36 is still valid because of FIBO 50% retracement level around this area. Okay. And we can see that there was some price rejection also. Okay, we can expect that 1935-36 should be working as resistance. Before 1935-36, we can see the next immediate resistance on the chart of gold is around 1925. Okay, and you can see that around 1925 I have also drawn a box here. So 1925 to 1930 is also a resistance zone on the chart of gold here. 1925, because we have FIBO 38.2% retracement level. You can see previous support will be working as resistance here. So 1925 also seems to be a legit resistance for us. Before the news, if market reverses from 1925-26 level with good price rejection from above, we can look for a sell position. But here you need to be careful again, because as I said, the market sentiment has changed. So whenever you whenever you go for a trade against the market sentiment, okay, you need to be careful. You need to reduce your expectation. So previously, when the market was in downtrend, okay, it was clear to us that we can easily go for a sell position and we can see it easily. Okay, but right now, as the market, okay, there, as you can see, the market sentiment is changing. Overall, the market still seems to be in downtrend. But my dear friends, all the markets in the world at one point have trend reversals, and trend reversals happen like this only. So right now, okay, we need to be careful. So as a result, okay, instead of looking for 100 pips trade, 120 pips trade, okay, I think it will be better for us to book or to after taking a sell position if we go for a target of 50 to 60 pips only. 1935 is a better level, so around 1935 we can look for a bigger target than 50 pips. But around 1925-26 level, if you go for a sell, if market reverses according to expectation, okay, I think we can go for a sell. 50 pips, 60 pips is decent enough, okay, when the sentiment of the market is changing. And moreover, the news is coming up. Okay, after news, if you see a big green candle, listen to me carefully. After news, if you see a big green candle, okay, obviously you should not go for a sell position, because news will be dominating the market and you need to follow the trend of the market instead of reversals. Okay, and before news, if we see the market is coming down, if market starts showing few red candles here, then you can look for some buy position around 1912 level. If the volatility of the market remains like this, we can expect FIBO 23.6 to work as support. Then we also have the next support around 1908. Okay, you can also draw Fibonacci from the lowest point of the chart till here. You will get the levels 1912, 1908. All these are retracement levels. If market comes and bounces, we can easily look for a 40-50 pips trade here also. So day traders, okay, you have a few trading opportunities, but swing traders, okay, if you already have any position, you can be on the trade and no need to go for any fresh position. Day traders, these are the trading opportunities that I see on the chart right now. Right now, market is standing at 1921. High chance that by the European session, market will be heading towards 1925. But so if you already have a buy position here, you can be on the trade, no need to exit. But if you're looking for fresh position, then I'll say that it's late, because if you take a buy position here, you can easily see your risk to reward ratio will not be in your favor, because your stop loss will be somewhere around here. So your target is 35 pips, and your stop loss is how much? Your stop loss is around 50-60 pips, which is not a good thing. So again, I'm repeating, the sentiment of the market is changing. Market is no longer forming lower lows, lower highs. We can see the market is trying to scale higher. We don't have a complete trend reversal with confirmations, but yes, this is the first step of any trend reversal here. So market is going up. If market reverses from 1925, 1926, 27 level, we can look for a sell position. But as the trend of the market is changing, and we will be taking a trend against the trend of the market, so 50 pips is a decent enough. On the other hand, if market breaks it with a big green candle, obviously we need to use our common sense, we need to avoid it, and then we can look for a next setting around 1936 level. These are the two resistances for the day, and be careful at the time of the news. Market may be volatile. Follow the trend instead of reversals. On the other hand, during the day before the news, if market comes down, you can also look for some temporary bounce around 1912 and 1908 level. We have derived this level only with the help of Fibonacci, nothing else. Okay, so these are the trading opportunities. My reference, if I have missed anything, write down in the comment section. I would love to learn from you. So that's all from my side. Bye bye, take care. And this is my analysis. I can be wrong as well, so please follow proper risk management. As I always say, be a trader, not a gambler. So do not gamble with your hard-earned money. Bye bye, take care.